David Houston with LiveWorld.
Thank you. Good afternoon, everybody. Thanks for coming and meeting with us. We're very happy to be here at the Planet MicroCap Las Vegas event. We hope you learn a little something about the company and what we're doing and where we're going. So we are LiveWorld. We are a full-service digital agency. This is our safe harbor statement in case somebody says something that could be construed as forward-looking. I need to have a little CYA, and that somebody would be me. I'm David Houston. I'm the Chief Financial Officer of LiveWorld. Peter Friedman, who's our CEO and Chairman of the Board, couldn't be here today. He had a previous engagement that was scheduled. But if anybody's got any questions or concerns, and I can't answer those questions, we'll be happy to set up a follow-up meeting with you afterwards. So the overview. I know I'm a CFO. I know we're not the most dynamic presenters, but if I can keep your attention for at least the next 5 slides, you're going to learn about who we are, what we do, who we do it with, and what are the results. So what do? We are a full-service digital agency. We have expertise in creative, technology, and social media and compliance. What's that mean? We work with our clients to develop positive emotional relationships with their end consumers. We do that through their marketing needs, through their customer support needs, and through their basic communications. So what does that really mean? What do we do? Like I said, we're a creative services agency. So you can see that we've got a number of services that we provide there. We've started this practice back in 2020, or actually 2019 was when we hired our first person, our creative director, and we've started to develop revenue in 2020, and that makes up about 20% of our total revenues. Secondarily, we do moderation and engagement for our clients. So our clients have a social media presence. They're on Facebook, they're on Twitter, they're on Instagram, they're on TikTok, or one of the other multiple platforms. We manage that for them. We manage that basically 24/7, and I'll go into greater detail for you on all of this. But that's about 70% of our total revenues. And finally, we have a technology component. Our conversational management platform. We license that, so it's a SaaS license for our clients. But we also use that platform in our moderation and engagement services. We also build bots and other things for our clients for the creative services side of the business. This next slide is going to be the most compelling sort of slide with regards to the value that we create for our clients. This is who we work with and how long we've been working with them. We've been working with American Express for 16 years. We've been working with Pfizer and Zoetis for over 14 years each. We've been working with Bristol Myers for 7. So we've got a roster of very good clients. In 2023, we're going to be working with about 75 different brands across 25 different clients. So what's our business model? When you look at sort of the value that we create and the value that our clients see from us, they are basically willing to pay us more than it costs us to actually do the business, which in a typical business seems pretty sort of obvious. But when you're dealing sort of in the social media space, not so obvious. A lot of people are losing a lot of money. We have annuity streams. Those moderation contracts renew year after year after year because we are protecting their brand and we're engaging their brand with their end consumer. Our creative services acts more like an annuity because we typically get year-long contracts with our clients. That strategic relationship then allows us to pull in the moderation and the SaaS software licensing fees, which have the higher margins. And again, we also need to meet the compliance needs of our clients. So we're also vertically focused. What's that mean? So a few years ago, we decided we were going to focus on healthcare-related companies. And what we did is, by combining that, our focus on healthcare, and combining that with our unique solution set, we've seen significant growth in our revenues over the last few years. And we've seen significant growth on the healthcare side, where it represents about 90% of our total revenues right now. As I said, we're working with about 25 clients right now. When you look at the healthcare side of the business and you look at pharmaceuticals and device companies, we see that we have an opportunity to continually grow this company for the foreseeable future. And then beyond that, we would look to expand into other verticals, probably something along the lines of financial services to go along with our experience with American Express. We've also got experience with other large banks as well. So now I'm going to give you sort of what the results have been for the company over the last few years and what we've been doing. So our ticker symbol is LVWD. Our average stock price in the first quarter was approximately 17 cents. Our 52-week range is between 10 and 27.5 cents. We are a limited information company, so we're not fully compliant with the SEC, but we are compliant. We do comply with 15C211, which makes us freely tradable. Now, from the financial side, 2019, we had about $7.4 million in total revenues. We had a loss of almost $450,000, and we ended the year with about $730,000 in cash. It wasn't the only reason, but it was a very large reason. I have white hair now. In 2020, we were able to grow that business up about 16% to about 8.56 million. We had a profit of about 5% at $366,000, and our cash grew to $2.5 million. We were able to grow that business by about 18% to just over $10 million in total revenues, about $796,000 in total net income, and our cash grew to $3.5 million. And this past year, we were able to grow at about 11%. Our net income grew to just over $1 million, and our cash has grown to about $3.8 million. We've done this without incurring any debt, and we've done this without issuing any stock. So what is the business solution, as we sort of discussed earlier? So the three elements are sort of the creative, the moderation, and the technology. We can sell them independently, or we can sell them as a group, or we can sell them in pairs. So if you look at it and you say, okay, we're going to start with a creative business proposal. We're going to work through that. Then we're going to try and add that moderation. Why does the client want that moderation? Because they're going to understand what their end consumers are thinking and what they think about their drugs, what they think about the business, and how they feel about it. And we use that technology component to actually figure out what that sentiment is for the end consumer. Now, on the creative side, it's just as you would think. It's creating creative marketing programs for our clients that create that positive emotional relationship between our client and their end consumer. Now, we try to do things that are a little different, a little out of the box, but we also need to make sure that we're dealing with the compliance issue. As I said, 90% of our revenue is coming through healthcare. They've got to deal with FDA and other regulatory bodies. So this is critical that you understand the regulatory issues that they have to deal with. Making a simple copy change on an ad is not as simple when you're dealing with healthcare, and you must have that expertise. Now, here's sort of the moderation, and I'll go into a little bit more about this. So this is part of our business where we have approximately 130 to 150 moderators throughout the United States, and probably another 20 internationally, more so for language expertise. And what we do is sort of threefold. One is protecting the brand. We sit down with the client and we understand what's acceptable, what's not acceptable, right? What can be posted to their social media platforms, and what should be taken down. Are they cursing? Are they saying something derogatory about a different group? We're going to take those things down. If they say something bad about the company, they may or may not want to have that taken down. The other thing that we do is, as I said, is developing that sentiment. We're going to tag these responses. We're going to be able to see what it is, and we're going to be able to go back to the client and say, hey, this creative work is working. Hey, these people like this, or they don't like this, and we can make adjustments in the advertising as we move along. And the other thing that we have is adverse events. So the adverse events which is really critical for pharmaceutical companies, is a must-have for them if you want to be in social. If you're going to be in social, you have to have a moderation service. And the reason for that is an adverse event can effectively cause material changes to a pharmaceutical company. They could be fined, they could be shut down by the FDA. So what is an adverse event? I'm David Houston, I take XYZ pharmaceutical drug, and I go onto their Facebook page and say, I just took my drugs, and now I'm seeing giant purple dinosaurs. Nobody wants to see giant purple dinosaurs ever. Our clients in pharma, our clients in healthcare, they can't just let that sit there. That's not just something you can just sort of ignore. And if I do that on a Friday evening at 9:30, you can't wait till Monday morning to address it. So our moderation group protects them through the use of our services and the hours that we look at them. So we're looking at them consistently so we can address that if it happens on a Friday night. And we can escalate that internally and to the client so that there's something that's taken care of there. Excuse me, before I go on. And so, oops, there we go. And this has actually happened to us. This has actually happened to one of our clients recently, where they gave us a call and they said, hey, we've got an issue. We need to have the information associated with this user and what happened, what took place. Now, by using our technology and our platform, we were able to go back from the very beginning, the very first post, and look through every single post that they made, every single response, and be able to see this is exactly what we did for them. And we were able to produce this report to our client in 2 hours. They wanted it in 2 days because they needed to go through it to report to the FDA as to what happened. They came back to us and said, thank you very much. You saved our butts, because we had everything in line, everything straightened out for them. And there was nothing that they had to that was concerning for the FDA regarding this particular situation. So again, this goes back, the next step is again, the technology. And this is the scale of the technology. And it also, as I said, allows us to understand the sentiment of the users, of the end users for our clients. So I know I said that those last slides were going to be the most important slides, but here's a couple of slides you may want to pay attention to as well. How do we grow this company? We've grown the company from about 7.4, 7.5 million with a loss to about 11.1 million with about $1 million in profit. So the initial sell is going to be where we start, right? It could be something as small as a $25,000 sale. We're doing some sort of social media audit for a client. Could be a moderation engagement where we've got a brand and they need 24 hours, 7 days a week moderation. Could be a small creative deal that we're going to be working with them on. Any one of those things. Could be an AOR deal. That could be some sort of combination of three. So how do we grow that? Well, you add additional services, right? If it's a creative deal, as I said, we want to add that moderation so that we can understand and the client can understand the nuance of what their end users are saying and doing and wanting. We're also going to want to add that technology platform because that's going to allow us to understand that sentiment. So how else do we grow that? How do we grow that from, that 25,000 to 250 to 80 to 250? And now we're saying, how do we grow from 250 to 1 million? Well, we add other properties, right? We work with large companies that have multiple brands, and we add those additional brands. We add, or excuse me, not additional brands. This is additional social property. So this would be if our client is only in Facebook, and now we're saying, listen, you really need to take a look at what's going on TikTok. You really need to take a look at what's going on Instagram and how you're going to focus your energies and your marketing there. And then the programs can just get larger, right? There's more usage. There's more people involved. End users, I should say. And then there's this sort of, as I said, growing by adding brands within the company. So you could continue to see that grow. And I'll give you an example. We work with a company called, Neocate. So Neocate was the first brand we started working with. The client is actually Nutricia. Nutricia is a division of Dannon. So Neocate is the first brand we started working with. We started doing creative services for them. They loved our work. They then acquired a company called, a brand called Real Food Blends. We got an introduction to them. We started doing creative work for them. Then after that, we got introduced to another brand called ProStat, which is a protein enriched foods for elderly. We then got introduced to another brand called Cytovade. I believe that's how it's pronounced. But it's a little bit French and I'm definitely not. They then said, hey, LiveWorld, we want to look at having moderation services. So we've been doing creative services for all these brands. We've been able to double the revenue from this particular company, Nutricia, every single year for the past 3 years. And now they're saying, hey, now we want to take a look at adding additional services. So that's sort of a case-by-case basis of how we can grow our revenues. So what does that mean for us as far as over the next few years? We're an $11 million business. We're doing about 9% profit. How do we grow this thing, throw some gasoline on that, and make it valuable? Well, if we add 2 to 4 new clients every single year, net increase, we grow our average clients by about 10% per year. We acquire new brands from existing clients, and we expand our service offering. So you can see in 2022, we were about $11 million, and you could see we could grow this, double this in the next sort of 5 years. And these aren't astronomical growth rates. They're reasonable. If you ask me, they might be a little light, but it's definitely doable and seeable for our company. Here's your proverbial, the market is big slide. I'll get into that in just a minute. So here's your proverbial, the market is big slide, right? Medical devices are about spending $2 billion a year. Pharmaceuticals about $16 billion in US market spending. Here's another slide that actually explains what we're doing. We are managing over 350 social media properties and providing over 90,000 hours of moderation annually to all of our healthcare related companies. This is going to show you sort of the healthcare related revenues, right? In 2019, we were about $6 million in total healthcare related revenues. Last year was about 9.9. So we've seen significant growth over the last few years. Now we'll go into sort of the shareholder value. I know some people don't want to hear management say, hey, we're undervalued, we should be valued more. So I won't do it. What I will do is I'll give you a little bit of information so that you guys could noodle on it and think about it. If you look at a comparable digital agency, they're going to be trading at about 2 or 3 times future revenues. That's an industry standard sort of. Now you look at us, we're not providing that kind of information at this point in time, but we did 11.1 million last year, $1 million in profit. Again, 3.8 million in cash and 0 debt. That gives us a valuation given 45.6 million shares at our average stock price of 17 cents of about $7.8 million. Now, if you take the enterprise value and take that cash out, you're saying the enterprise value of this organization is only about $4 million. I'll let you guys doodle on that. So what's our path to liquidity? What does that look like for us and for our shareholders? Well, in 2018 and 2019, we had to make sort of a decision of, well, what are we going to do? And we decided to focus the company on healthcare. And we decided to create the Creative Services Group. So in the past couple of years, we also needed to demonstrate that we could actually do something, right? We needed to show that we could grow the revenues, show that we could grow the profits, and show that we could grow the cash. We've done that. So now we're sort of stepping back in and we're working with various groups to understand sort of what does our IR look like? How do we re-engage with the investment community? And so that's what we're doing. Now in the future, what we would look to do is obviously look at the OTC, look at the QB or QX, look at doing audits, look at doing SEC compliance, and maybe doing some more sort of acquisitions. But we're not going to do anything at this point in time, because even if we did some sort of an acquisition that was only $2 million, and you said our stock price was 20 cents, that's 10 million shares. I got 45.6 million outstanding. That's quite a lot of dilution at this point in time. I think I might have to fire myself if I did that. So this is our last slide, and then I'll open up for questions. So our investment highlights. We've got strong client base, primarily Fortune 500. We've got long-term relationships 16 and 14 years and 10 years. We've got a proven business model. We've got annuity-based revenues. Our business model we've shown, we've been able to grow the top line revenue and grow the profits and grow the cash. And we've primarily got annuity-based revenue. That annuity-based revenue is basically 75% of our total revenues. And we've got a strong balance sheet. We have no debt. We ended the year with $3.8 million in cash. I think our biggest liability is going to be a vacation accrual for our employees. And with that, I'll open it up for questions. I think my first question is, what are our gross margins? So our gross margins vary. So on the moderation side of the business, it's going to be in that 70-75% range on the gross margin. On the sort of SaaS model, it's going to be more towards the 80%. I would say that our creative services is lower than sort of average. We anticipate the average to be somewhere around 40%, and we're going to be lower than that right now because we're building out that business. And we're sort of, we've got to sort of build in front a little bit. We don't build in front that much, but we definitely can see the margins increasing there. Sure. At 20 million in revenue? 20, I would say well, net income would be sort of in that 10 to 12, probably. We would still be making investments. Any additional questions? That's it. I mean, that's what we got. I can answer things, or why are we public? That's a good question. Company was founded in 1996 as Talk City. It was sort of a precursor to almost Facebook. It was a community-based, large-based community entity. Went public in 1999, late 1999, I think it was. And then in 2001, the market collapsed, everything fell apart. The founders decided that they were not going to walk away from it, and that they were going to try and make this business work, and that's what they've been doing. So Peter Friedman is the founder, CEO, chairman of the board. He's been with the company since the beginning. He owns approximately 22% of the company. So he's got a lot of skin in the game, and he wants to see this thing through. It's a cost, right? I mean, last year it was $11.1 million in total revenues, $1 million in profit. If you look at doing an audit, just a one-year audit, obviously the first year you're going to have to do 2 years. You're talking $150,000, $200,000 for the audit. Then you've got about $50,000 each quarter just for the reviews. Then so you're looking at what, between $200,000 and $350,000 that first year, not even the first year, the first rolling year. And then you double that because that's just my audit fees. I got to add my legal fees. So now I'm at $700,000. So if I look at the company and I say, we did this last year, I'm a $10 million company that makes $250,000 to $300,000. Not real compelling. The idea is that we want to grow this business so that we're at 15 million and we're doing $1 million in profit, but we're also doing the audit work. And so that's a meaningful, it's something we want to do. There is sort of that inflection point of when does that happen? We don't think at 10 million, $11 million, that's where you do it, but we do want to do it. We want to move forward, in which case it obviously makes it a more desirable stock to trade. Anything else? All righty then. Thanks, everybody.